Hey traders and investors, it's Serge Berger here. In today's video, I want to have a look at gold. Gold's having a pretty good day today, so let's have a look at what's going on. I do think, so you know, that we're in a much more constructive phase here from a cyclical perspective in gold. So what I'm going to use here is the GLD, that's the Spider Gold Shares ETF. And through that lens, let's first look at the big picture, which is really what we always need to look at in order to gain some perspective of where we are, how we got here, and ultimately where we might be going. So first of all, and it doesn't take a rocket scientist to figure this out, we have been in a really clear one-sided market basically since the top here in the summer of 2011. If we peel back the chart a little bit more, or as we have right now, you can see that really there still is a pretty good chance that this indeed in the end will just have been a consolidation phase that may not necessarily lead to new highs anytime soon, but that ultimately stands a pretty good chance of moving higher. So let's look at a couple things, and starting with momentum first. Very simple, you can see that momentum, so downside momentum, and you can see this in price action too. Downside momentum was sharpest here in this period from 2012 into the summer of 2013, and ever since then we've been trading lower for sure, but much less forcefully so. In terms of the oscillators, the relative strength index, you can see is showing this by making a series of higher lows ever since that summer 2013 period when we started peaking in downside momentum. So that's at the margin a positive thing. Now let's consider that. Let's also look at some simple support lines. We had a pretty decent consolidation phase from 2008, so March 2008, up until let's call it November 2000 or late 2009, and that area has now been successfully retested. We've tested that area, and that's a pretty good thing to do through a longer term lens. From a pattern perspective, it doesn't take any crazy math to do either here. We can do it very visually. You can see we are very much still stuck at the end of the day in a consolidation pattern through this lens as well. And we have tighter ranges here as well. So this range, particularly ever since momentum peaked, so let's call it, again, summer 2013, has been much tighter. And ultimately, we tend to see breakouts out of these ranges, and maybe the first upside target here is closer to 126 through a multi-month lens, I'm going to say at least, than anything else. So that's the big picture. Let's look at this a little bit more close up, and on a daily chart, you'll see that the GLD has finally overcome both its 50-day moving average, which is this yellow line, and is now finally today so far, and the day is not over as of this recording, but so far today, we are successfully piercing back above that 100-day moving average, which had been acting as resistance here in early this year, and now finally after consolidating, it's back above it. So it's important to note here that what you can see is that the 50-day moving average was resistance. It then became support here on the 14th of January, and then the 100-day moving average became resistance. We're now pushing above it, so maybe that'll become support next. So this is pretty constructive as far as I'm concerned. From a price perspective, maybe one last thing, what I think is very important here is this. You can see that we actually broke below those summer 2015 lows in later in the latter part of last year, and after consolidating are now breaking above it. So all this is pretty constructive. I think it's time to go long gold as a theme in 2016. As a housekeeping note, I want to give you guys another heads up that on Thursday, so this Thursday, I believe it's the 28th of January, we are going to have the 2016 Market Outlook webinar. So be on the lookout for that webinar registration email tomorrow, Wednesday and Thursday. Also, please, guys, subscribe to my channel and like my video. That's how I move up in the YouTube ranks. And as always, I will see you in the next video.